first of all, we have to establish our trend, right? So if we are to establish our trend, the market started from here, moved up, that is our high, and made a low, which respected our previous low, made a new high, and then made another low, which respected our previous low, and then made this high. So we expected the market to make a low which will respect this low, but then the market break through this low here and made this one and came to rate test over here, right? So after the rate test, it's made another low here. So there's the structure we have right now. So we have established the connection that our previous low is broken. And if our previous low is broken, it means the market has changed direction, right? So if the market has changed direction, good. Now we have to determine our new highs and lows. So the market started from this high and then made this low, made another new high, right? And then made a new low. So we are expecting this movement here to respect this high and then come back down, right? So let's drop down to the 4-hour time frame. So in the So in the 4-hour time frame, you have this structure where the market started from here, ended here, and then correct itself and made another impulsive move to create a new high, corrected itself again, and then made another new high, and then corrected itself. But this time, we broke through our previous low, which tells us there's a change in trend, there's a change in the market trend, right? So the market has changed its direction from the upside to the downside. So we got this new high and then made this new low and then made another new high and make our current low here. So this our current low here implies that this movement should be our correction movement, our corrective movement. This is not impulsive movement. So now our new high is this one and our new low is this one, and we are trading between these two black lines. Okay, we are trading between these two black lines, which means the market should respect this high here. The market should respect this high here and then break through this low here. The market should break through here. So we are expecting the movement to maybe continue like this, like that, and then come somewhere here and then break through this one, right? So this is what I'm expecting at the moment. So how do you know that the market the correction of the market has ended and is now ready to go to the downside? We have something we call bullish candlestick, or sorry, not bullish, engulfing candlesticks, right? We have something we call engulfing candlesticks. And then when we do the candlesticks, Ankasa, you understand the engulfing candlestick. I think I've explained it before. So look at this red candle here, this big red candle and this green candle here. You could see the green is very small than the red. The red has engulfed. When we say something has engulfed something, that means it has overshadowed it, right? So the red has overshadowed the green here. So if it happens like that, we call it engulfing candlestick. So we are expecting this movement after it ends. We should see something like this like something like this right here, right? To engulf the previous candle, which might be green or whatever. But then the current candle that we are looking at should be bigger enough to do something like this or something like this, right? To tell us that the market is ready to go to the downside. You get it? So just like this one, let's assume that we are using this high and this low, right? So the market move from a high to a low here, right? And then move to make a correction towards the high, right? And in between or along the way, the market stop, which means it's either it wants to go to the downside or maybe resting somewhere and continue to the upside. But watch here. This thing is not. Watch here. Watch these two candles. So after the market got here, first of all, the tells or the wicks here tells us that the market is getting exhausted, is getting tired of moving upward, right? So eventually it got tired and then made this red candle, which overshadowed the green candle. It engulfed the green candle, which tells us that now the market is ready to do or to go to the downside. So immediately after this candle form finish, we start to enter our trade somewhere here. Start to enter our trade somewhere here, right? And then we hold the trade. And after we enter the trade, our target or our profit margin is this low because we know that the market should come and then break through this low. It shouldn't break through this high, but then it's supposed to come and break through the low here, right? So this low will be our target point around here. You set your target here that the market should move from here and then come and hit your target, and then you are out of the market, right? So, right. So after this low was broken, the market is now doing exactly what it did here. So this movement was our impulsive move, and then this is our corrective move. Impulsive move and corrective move. So what it did here, you expect that it will do the same thing here. You look for engulfing candle and then you start to sell and then to go to the downside, right? So that is what I'm trying to say. But then let's look at something. If we open, you could see the market structure forms everywhere. That is why I said in an impulsive move like this, in an impulsive move like this, it has a series of highs and lows. That means it has inner market structure. So if we are to determine that, you could see the market made this low, made a high, made another low here, another high, low, right? So meanwhile, if we are to follow what we have said about the market, so we expected the market to respect this high here and then move downwards, right? But then on the higher time frame, the main high is this one, right? So even though you can target the market to come here and then move down, which it did here, and move this one down here, you can do that and trade. But then sometimes it won't really go far. You get it? So as it is now, we are looking at what? We are looking at retracement here, but then in our impulsive trend, we have this high and lows, high and lows, high and lows over here. So what you should know is the highs and the lows forms in all the time frames. As far as the market is trending, it forms everywhere, right? So even if, let's look at the corrective move here. It started from here, and then this was our last high here, right? And they made a low here, and broke up again, make a higher high, made a lower low, which respected this one, and then made another high, made a low, which this one broke through this low, but then look at where the candle formed. The candle body is above it, so which is valid here, and then currently making a low here, sorry, a high here. So you could see the market structure there, it forms everywhere, but then you should know where the direction of the market is actually is. So here we are in the downtrend, so we will expect something like this for the market to come here and then drop all the way down here, right? So if we start selling from here, our target is this point here. So because we expect the market to come and break through this one, so we target here as our profit margin point, and then we are out of the market. If we can hold, maybe the market will do something like this, then break through and continue going downside, right? So